Hey everyone, welcome back to Corporate Decoder. Today, Ascent Solar Technologies Inc. just filed a Form 8K detailing their annual shareholder meeting, and there is one key vote that signals their future direction. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals a significant shift in their equity incentive plan, which could greatly impact future shareholder value. This is a current report filed on the 17th of June 2026, giving us a look at what happened at Ascent Solar Technologies, Incorporated's annual meeting of stockholders held on that same day. Ascent Solar Technologies Incorporated, as they are officially known, is the company we are looking at. They are incorporated in Delaware. This report is filed under the Securities Exchange Act of 1934, which is a big deal for publicly traded companies. Their main stock, the common stock, is traded on the Nasdaq Capital Market under the ticker symbol ASTI. One of the big events covered here is related to their equity incentive plan. Essentially, the company's stockholders approved an amendment to increase the number of shares available under their 2023 equity incentive plan. The details of this plan were outlined in their April Proxy statement. Now, let's dive into how the stockholders actually voted on various proposals at the annual meeting held on the 17th of June 2026. This is where we see the shareholders' voice. First up was the election of two class of directors. The proposals were for Berezovsky and Forrest Reynolds. Looking at the votes for Berezovsky, out of the common stock votes, almost 1.5 million were for the election, with about 35,000 against, and a small number abstained. The broker non-votes were quite high at over 3.7 million. However, based on these numbers, Berezovsky was duly elected by the shareholders. Similarly, for Forrest Reynolds, the vote count was very close. Roughly 1.48 million common stock votes were for, with about 35,000 against, and a similar number of abstentions. Again, a high number of broker non-votes. Forrest Reynolds was also duly elected. Next was the proposal to ratify the appointment of Haney & Company as their independent registered accounting firm. This is a pretty standard vote. Here, the numbers are overwhelmingly in favor. Over 5.1 million common stock votes were for, with only about 32,000 against and around 64,000 abstentions. There were no broken non-votes for this proposal from the common stockholders. Proposal 2 was approved. This suggests shareholders have confidence in the accounting firm. This is a really important one. Proposal 3 was the approval of the amendment to the company's 2023 equity incentive plan. Remember how I mentioned they wanted to increase the number of shares available? This is where that decision was finalized by the shareholders. For the common stock, over 1.36 million votes were for this amendment, while about 146,000 voted against, and around 15,000 abstained. Again, a significant number of broken non-votes here. Proposal 3 was approved. This is a big deal because it means the company can now issue more stock options or grants to employees and executives. Proposal 4 was an advisory vote on the compensation of the company's named executive officers. This is often called a say on pay vote. The results here show about 1.44 million for, 68,000 against, and around 18,000 abstentions from common stockholders. Proposal 4 was approved. So, shareholders on an advisory basis approved the executive compensation packages. Finally, Proposal 5 was to approve adjourning the annual meeting. This received a strong for vote with over 5 million votes in favor, about 200,000 against, and around 27,000 abstained. Proposal 5 was approved. This likely means the company wanted to ensure all business was properly conducted, or perhaps to allow more time for discussions if needed. This section lists the exhibits filed with the report. The most significant exhibit here is Exhibit 10.1. This is the actual amended 2023 Equity Incentive Plan. This document legally lays out how and when the company can grant new shares to its team. And here we have the signatures confirming the authenticity of the filing. The report is signed by Jin Zhou, who holds the title of Chief Financial Officer. This filing officially happened on the 17th of June 2026. When we look at this filing, the key takeaway is the approval of the amended equity incentive plan. This effectively allows Ascent Solar Technologies Incorporated to grant more stock awards. With a market cap of around $59 million and only 14 employees, as per recent data, increasing the equity pool can be a critical tool for attracting and retaining talent, especially in a competitive tech sector. However, it also means potential dilution for existing shareholders if new shares are issued at low prices. This is common for smaller companies looking to incentivize growth. The high number of broken non-votes in the director elections is also worth noting. It indicates that a significant chunk of shares were held by brokers who did not receive voting instructions from the beneficial owners. This can sometimes lead to less direct shareholder control over certain decisions. Looking at the broader context, Ascent Solar Technologies has been in the news regarding its renewable energy potential and future earnings forecasts. The approval of this incentive plan is a strategic move that aligns with the company's efforts to grow and innovate in the renewable energy space. The question is whether this increased equity will translate into tangible growth and shareholder value, or if it will lead to significant dilution without a corresponding increase in company performance. Historically, companies that rely heavily on stock-based compensation without strong revenue growth can face significant headwinds. The risk I am watching is the potential for significant dilution from this expanded equity plan. My biggest concern is that without clear and rapid business growth, existing shareholders could see their ownership stake reduced without a commensurate increase in the company's value. What I'm actually looking for is how this newly available equity translates into tangible business achievements and a higher stock price, rather than just paper gains for executives. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take, stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.